Hi everybody, Colter Brown here from the Northern Ag Network. Thanks for joining us for the latest update on our livestock markets. Well, to say that we're in uncharted waters is kind of an understatement. Of course, you know these cattle markets are at or near record highs. That's not what you came to hear about, but how high is this market going to get? When is it going to come down? And how much better can the best market we've ever seen actually be? Well, we're going to try to answer some of those questions today and get a look at what the future might hold for the industry. First, though, I have to give a shout out to the sponsor of our report, Red Summit Advisors. Now that we're in the fall, it's time to be thinking about pasture, rangeland, and forage insurance. With Red Summit, you get real-time access to every acre to track how your coverage is performing. Regardless of the size of your operation, Red Summit's agents run the numbers to find the strongest policy setup for your land using historical data to see the rainfall trends. Visit redsummit.org/northernag to see policy options and connect with an expert in your area to get PRF coverage for 2026. Be sure to check it out before that December 1st deadline. Well, honestly, now that we're in the fall, it's kind of hard to get a beat on this cattle market. In some ways, we've returned to the seasonal tendencies and seen a bit of pressure on the market, but in others, it seems like we're just only going to see the prices continue to increase. Usually once we get past Labor Day, we do see some pressure on the beef complex, and that was the case in the futures. For the feeders, 2 weeks after Labor Day, we'd seen $20 fall out of the market, but since then kind of regained its footing. Most of these contracts finishing a little bit higher, and now we're right back near all-time highs. It's not quite the same story in the live cattle. The board dropped $10 in 2 weeks, making some of that money back. We have seen more strength in the deferred live cattle, but just not the same as the feeders. Now, I would point towards a couple of things that are pressuring the fed cattle. Of course, the cash trade. That's been trending down for 6 consecutive weeks. Live deals are down $13 on the average at $231. Dress trade just under $360. That's down $26 in the last 6 weeks. Two factors are driving that. First, seasonally larger harvest-ready supplies of fed cattle. That's turning feed yards into a bit more willing seller than they'd normally be. But also, we're seeing packers reduce the processing pace and also trying to buy cattle for deferred delivery. One of the reasons that they're doing that is beef prices have trended lower. Box beef had been extremely strong in August. Usually that's kind of the summer doldrums. But again, we got past Labor Day and those beef prices trending down. Not really significant cause for concern. Typically, we do see beef demand pick up later in the fourth quarter, so probably just a return to those seasonal trends, but these markets are still open to a lot of volatility. As we look at this month's cattle on feed reports, we're continuing to see numbers trending below year-ago levels. Most of this year, total on feed numbers have been down 1 to 2%. Placements weren't down as much as was expected, but again, they've been down most of the year. One of the largest contributing factors to that is the northward advancement of screwworms in Mexico. Just last month, USDA said screwworms confirmed 70 miles from the U.S. border. So the border remains closed to those Mexican cattle, and really that's just shortening the U.S. cattle supply 100,000 head that would otherwise normally be there. What's going to happen to the market if screwworm gets into the U.S.? Well, it seems entirely possible that it could before the end of the year. Really, it's not much of a market situation. There's no food safety concern from screwworm, but it could cause uncertainty, which we know markets don't like, but really it's a management issue. It's expensive to combat. We certainly don't need another headwind in the cattle industry, so something the industry remains on high alert for. That is definitely for sure. Now, as we think about where we're at in this cattle cycle, before we dig into that, I want to touch on one more news item that you might have heard about. USDA saying they're going to announce a plan to rebuild the American cow herd. What does that mean? Well, none of us really know at this point. Ag Secretary Rollins did say it's not going to include direct payments to ranchers, but she alluded towards things like expanding working lands to cattle production, improving risk management tools, and she talked about incentivizing the next generation of producers. Now that announcement expected to come out here in October, but I would wager that the government shutdown is likely to delay the release of that plan. But what is the future going to hold here? Where are we at in the cattle cycle? When are we going to grow these numbers, and what's the risk for prices? Well, we got to focus on the fundamentals. From a supply and demand perspective, demand we've already talked about. It's outstanding. Sure, there could be an outside factor, a black swan event, but right now, excellent beef demand. Probably going to see consumers back off on their beef purchases, but really that's just a function of the market rationing product with higher prices. So from a demand perspective, really we're looking at when this herd is going to grow and are we going to significantly retain heifers. We just don't really have the data to say that it's happening right now. Anecdotally, there's some cases we could point to of heifer retention, but you look at the numbers, the July replacement heifer numbers, the lowest on record. The calf crop this year, the smallest in over 80 years, and the feeder supply outside of feedlots as small as we have records for. So the industry's been slow to respond. We have seen reduced beef cow harvest. We're down 18% year to date, but that's really just a stabilization factor to maybe just small increases in the herd side. Really, it's that heifer retention that we're looking for, but ranchers are facing a lot of headwinds right now. Of course, costs continue to increase. Labor is a major limiting factor right now. Interest rates are of course, reducing our desire to use debt to expand the herd, and drought concerns, a major issue too. NOAA released their forecast recently and said drought's going to expand in the south and areas of the Midwest, western Wyoming. About the only area they said will get better is the PNW and into western Montana. So again, that remains a limiting factor to herd expansion. And I've talked about it before, but guys, remember it was like 10 years ago when we paid so much for bred heifers that scarcely had a chance to pay for themselves. Now that said, I do think we're going to see considerable improvement in the prices of these bred females over the next few months. And honestly, you look at where these calf prices are at today, and those bred cattle sound pretty affordable. But from where we're at right now, it looks like we're still at kind of a stabilization level in the cow herd, which means prices going to stay strong through 2026. Depending on when that heifer retention starts to happen, it could be well into 2027 or even out to the end of the decade. Now let's look at where these prices currently sit. Of course, we wrapped up the video sales season in September. You wouldn't have thought it could get any better than the August video sales, but boy, it did. Most of those calves selling 3 to 10% above where they were in August. Year over year, we're talking 50 to 60% increases, $2,400, $2,500, $2,600 a head on these calves. And I couldn't help myself, pulled the data from the low water mark in September of 2019. At that point, we were selling upper 5-weight steers $857 a head. This year, they're worth 3 times as much. So it's been an impressive market to say the least. Now that the fall calf run is getting going, prices have their best start we've ever seen to a fall. You know, a lot of cattle were sold earlier, so we've got a smaller supply to pull from here. That'll likely keep prices supported. You know, we've seen those light 5-weight steers averaging in the 480s, some of the 6-weights still over $4. So outstanding values here, and while they could see some seasonal pressure, they're likely to stay well above year-ago levels. The yearling trade has continued, comprised of mostly heifers this year, but still most of those yearlings bringing over $1,000 a head of what they were just a year ago. Weigh-up cow prices backing off slightly. We probably averaged about 166 in September on the weigh-ups, down slightly from the top of the year, and probably going to continue to trend lower through the rest of the year till we get to late December. But then we should see the seasonal rally into early 2026, which if you got the feed resources and can hang on to those cows, put 100 to 150 pounds on them, that could be a nice profit opportunity as well. Lastly, closing out with the lamb market, we have seen a welcome bounce back in lamb values. The last sale and pays, those heavier lambs did very well with 90 to 110 pounders, 193 to 207. The 70 pound lambs, 225 to 247. 80 pound lambs averaging right at 220. Well, thanks for joining us for today's report. The outlook is pretty positive for this cattle industry, so we're excited to see where it goes. For the Northern Ag Network, I'm Colter Brown.